Hey guys, involvement of money can easily trigger human emotions to greed and unfair practices. And this is where stock market have seen a huge growth during late 1980s because of increasing participation of people's interest towards stock market. So this increasing participation of people towards stock market led to a variety of malpractices and scams by companies, brokers and other consultant agencies. One of the famous scams was Harshad Mehta scam, which was exposed by journalist Sucheta Dalal, took place in the year 1992, and this led to created a need for regulatory authority for Indian stock market and gave rise to SEBI as a regulatory body. So hello everyone and welcome to the InvestoDUDE. I'm your dude Amit Raj. In this video, you will get to know about SEBI in detail and what exactly their roles and functions and kind of power it holds in Indian stock market. So let's start. What is SEBI? Security Exchange Board of India is a legal body of Indian government which was established on 12th April in 1992. It was introduced to promote transparency in Indian stock markets. Its headquarters in Mumbai and other branches in across country including New Delhi, Ahmedabad, Kolkata and Chennai. It forms all the rules and regulations for a proper and fair functioning of stock markets in India. Now let's discuss the structure setup of SEBI. SEBI follows a corporate structure where they have the board of directors, senior management and department heads. The SEBI hierarchical structure follows 9 head members. The first member is the chairman, which is followed by the 5 members, which is nominated by Union Government of India. The current SEBI chairman is Ajay Tyagi. The other 2 members is appointed by Finance Ministry of India and other 1 member is appointed by RBI, which is Reserve Bank of India. Now let's understand about the functions of SEBI. Number 1. Development of securities market. For a long period of time, the securities market remained under development due to variety of malpractices on the part of companies, brokers, merchant bankers and other involved in the security markets. SEBI was set up mainly to develop the capital market in general. Number 2. Protection of interest of investors. SEBI aims at protecting the rights and the interest of investors through accurate and authentic information. SEBI takes legal action on the defaulting companies in matter of non-payment of dividends or non-issue of certificate of shares after the allotment of shares. Number 3. Regulation of capital market. SEBI regulates both primary and secondary market of India. Every issue of shares to public by companies is subjected to the clearance from SEBI. It is also issues guidelines from time to time to regulate stock exchanges regarding time settlement and speculation. So guys, if you want to know more about primary and secondary market, please check out our second video, link is in description. SEBI also educate the investors about the information regarding companies. Now let's understand that what kind of power that SEBI holds in Indian stock markets. Number 1. Judicial power. SEBI can pass the judgment in case of fraud and unethical practices in stock market. Number 2. Executive power. SEBI has the power to check the book of accounts and other important documents to identify or gather evidence against the violation of companies and investigate them. Number 3. Legislative power. SEBI protects the interest of investors. SEBI forms such rules and regulations to get rid of malpractices that are prevented in stock markets. So guys, explore more about stock market investing and finance by subscribing InvestoDUDE YouTube channel and be updated for our next video on investing and trading, where we'll discuss about the differences and techniques of investing and trading. So guys, stay tuned with InvestoDUDE. Until then, best of luck and see you in the next video.